So total number of trades per month, the number of trades that reach profit target 1, the resulting percentage of wins. So you can see on the low side, it was 70% wins. On the high side, an 83% win ratio. That's on average, ladies and gentlemen. We are achieving a 75% win ratio using 115 and 130-minute trade. Here's the total number of pips that would have gone into your account. The average number of pips per trade that you would have been profiting. And again, for kicks, just the average length of time a winning trade would have been held open. On the flip side, the total number of trades that we lost would have been stopped out. The resulting percentage, and here again on the high side, we're losing 30% of the time, but on the low side, we're losing 17% of the time. On average, we are losing 25% of our trades only. So now we're going to take the total number of pips to the good, deduct the ones that we would have lost, ended up with a total number of pips for each month. Again, note, ladies and gentlemen, every single month is positive. So here we are, the pound dollar, using this new strategy of taking one trade when available on a 15 and a 30 each day. We'll let month 1 represent August, 2 September, 3 October, 4 November. And the plan called for us, I'm only going to work with a standard account here. Standard account calls for us to start with $25,000. So we will start this new arrangement, this new strategy, starting the account with $25,000. I will trade it with one lot. I will take the results that I just shared with you from August, multiply them by one lot, and I'll produce an income of $1,940. If you're thinking in terms of an annual salary, that's $23,280. Now, for month 2, it requested that we start with $29,000. I'll take the 25 plus the $1,940, and we can begin month 2 or September with $26,940. Using the 5% maximum risk rule, we can trade with 2 lots. That's still a little less, but we're still within the guidelines of not exceeding the 5% risk rule. So I'll take the results of September, multiply them by 2 lots, and produce an income of $9,240. A little bit more than what the plan calls for. That's good. If you're thinking in terms of an annual salary, we're exceeding $100,000 in only our second month. Now, month 3 calls for us to start with a balance of $37,000. We'll take the $26,940, add the $9,240, and begin October with $36,180, just spitting distance from the 37. That does allow us to trade with the 2 lots as recommended according to the plan, so that we don't exceed that 5% risk rule. I'll take the results from October, multiply them by 2 lots, and produce an income of $20,240. If you'd like to see what that annual salary equivalent is, that's closing in on $250. Whoa, that's really nice. Now, month 4 requested that we begin with a $45,000 account balance. We'll take the 36 plus the 20, and we can begin with $56,420. Now, I will use the 5% maximum risk rule and still be allowed only to work with 3 lots. So I'll take the November data, the results from November, multiplied by 3 lots, and produce an income of $10,590, just shy of the 12. And if you're interested in the annual salary equivalent, that's $127, just over $127,000. Now let's move over to months 5 through 8, which will be December through March. And the plan requests that we begin with $57,000 in our account balance. We can begin with $67,10. Using a 5% maximum risk rule, that still does only allow us to trade 4 lots. So I will take the results of December, multiply them by 4, and produce an income of $34,600. Here's your annual salary equivalent in only 5 months, ladies and gentlemen. Now, month 6 requests that we begin with $73,000 in our account. We'll take the 67 plus the 34 and begin with over $100,000. You've taken, in half a year, you've taken $25,000 and grown it to over $100,000. Using the 5% maximum risk rule, we can now trade with 6 contracts or lots, not just 5 as recommended by the plan. Therefore, I'll take the results I shared with you in January, multiply them by 6 lots, and produce an income of $41,340. Here's your annual salary equivalent. You're closing in on your $500,000 mark. That's great income for 6 months, ladies and gentlemen. Now, month 7, the plan asks for a starting balance of 93. We can begin with 142,950, almost 143. I'll use the 5% maximum risk rule, and we would be allowed to trade with not 6 slots according to the plan, but 9. I will take the results of February. And remember, I'm not breaking the 5% risk rule, ladies and gentlemen. I'm staying within my own guidelines. So I'll take the results of February, multiply them by 9 lots, and produce an income of $42.30. Here's your annual salary equivalent. We are over the $500,000 mark in 7 months. Month 8 requested that we begin with $117,000 in our account. We can begin with 184 plus. Using the 5% maximum risk rule, we can now trade with not 8, but 12 lots. I'll take the results of March, multiply them by the 12 lots, and produce an income of over $53,000 in only 8 months. If you're thinking in terms of an annual salary, here's the result here. Now, what I've just shared with you is making a minor modification to the strategy. Instead of just trading off exclusively the 15-minute chart and exclusively off a 30-minute chart, we take one trade off of each whenever they're available each day during the London session. And had you used our software and used this strategy starting in August of last year, as of last month, you could have grown a $25,000 account to just under $200,000. In essence, you'd be making over $500,000 per year in terms of the equivalent. Pretty amazing, ladies and gentlemen. Let me do one other thing for you. Let me compare the 15, the 30, and the 15 and 30 side by side. So we're going to begin with months August through March, and I'm going to show you the plan first. Now, this is what the plan calls for to acquire or accumulate in terms of you starting with $25,000. You would have added $4,000 in August, added $8,000 in September, etc., for a total of $124,000. That's what the plan calls for. Now, what we did is I said I first showed you how to, or if you chose to, trade exclusively off of a 15-minute chart. Here would have been, these are just what I showed you yesterday. I'm showing you what you would have brought in each month for a total of $52,380. So it's decent income. It's good income, but it's not meeting the plan. So I said, what if you were to trade a 30-minute chart exclusively? And once again, these are the results that I shared with you yesterday of the profits you could have made using our software in this strategy, trading exclusively off of a 30-minute chart for the past 8 months for a total of $81,220. Better than the 15-minute, not quite the plan. So what I'm suggesting is that you trade, or you execute one trade off of a 15 and a 30 when they're available, and what I've just shared with you are the results for each month for a total of $213,140. That's how much you could have added to your account starting with $25,000. Now, once again, if you think in terms of annual salary, which I still tend to do, I want to share with you, I've taken, like according to the plan here, and I've taken all of these, added them together, and I averaged them out. So if you were to accumulate all of this income over the past 8 months and average it out over the 8 months, you've been earning an annual salary of just under $186,000. If you trade, that's the plan. If you were to trade exclusively off of the 15-minute chart, same sort of results, you would have been earning just under $80,000. Exclusively off of a 30, you would be earning over $100,000. This is an average. You take all of these together, add them together, divide by 8, and multiply by 12. This is your average annual income. And if you do this for the 15 and the 30, you sitting down, folks, in 8 months, you're making the equivalent of over a $300,000 salary.